Let's now bring in Greg Melich. He covers ASO at Evercore. He's got a buy rating in the stock with a $33 price target. Greg, welcome to the show. Thanks for being here, because this is a name that we don't really talk about often. But just to pick up on where Justin left off in terms of the overlay of where the stores are and the mask mandates being lifted, is this part of your bullish case when you lay out your bullish case?
Well, it could be. I think what we're learning right now, and this is true for retailers across the country, is for a lot of the COVID winners last year. In the case of Academy, they had very strong comps, ended up being about double digits for the year. And there was a lot of concern. What happens when we have to cycle people buying outdoor equipment, right? Their sports and outdoor, camping goods, you name it. And so now we're starting to see that reopening. So I don't think the mask has much to do with it. It's really the reopening generally. And there are a lot of these activities that consumers did last year that, we do think their sales will go negative in the second quarter. That's been the fear, but they might not be as negative as people think. And we think as a result, they could end up having flat comps for the year and grow earnings to $3 by next year. And so we just think it's too cheap a stock for the quality of the business it is.
Hey, Greg, it's Jeff Mills. Thanks for being on. I just had a quick question about the business leading up to 2020. Obviously, 2020 was a good year. There were certain tailwinds that the business enjoyed. But if you look at same-store comps in the 3 or 4 years before that, not necessarily all that robust. Can you talk a little bit how you might see that changing going forward, if at all?
That's a great question. So they've had a new management come in over the last few years that basically reinvigorated the merchandising, got a lot more local product in the stores, got rid of some things that were non-core. And as they were getting through that, you did see comps turn from negative to slightly positive for 3 quarters before COVID hit. So I think ideally you would have liked to see more of that, not just for 3 quarters, but maybe 6 before COVID hit, but it hit when it did. And they pivoted very quickly to doubling their online penetration to 10% of sales last year from 5%. So they really took care of their customers and got the products they needed last year. And the key now will be, there will be hard to cycle some of those things, but there were a lot of areas that were weak last year, like team sports, which we think was a mid-teens percentage of their sales if you add in licensed apparel. So these are things that were weak last year that now that we're starting, high schoolers and kids are starting to go back to the baseball diamonds and football fields properly next fall, that could be an area where they could make up some of those difficult comps that they're going to have in, say, camping equipment.
So let's talk about those digital comps, because that to me is really the crux of the story. And yes, we're talking about this on Reddit boards, but I mean, this is so different than GameStop in terms of a company that really has actually had a tailwind. It's not a challenging valuation. It's not a broken company. But the key, it sounds like, and the key to the surge here is not only stimulus checks and pent-up demand and people wanting to get outdoors, but a company that's learned how to get into the online business. So is that really a game changer?
It is a game changer. And I think any traditional retailer, if you hadn't figured it out in 2019, you have to figure it out now. E-commerce is going to be 35% of U.S. retail sales in 5 years. That's what we believe. That it was 20% now, basically. And so pivoting your business to that, and we think multi-channel, it's not just e-commerce players like Amazon, which we like. It's traditional retailers pivoting to being truly multi-channel, where they become agnostic and they can serve the customer either shipping to them next day or same day, or tell the customer, you know what, you want to buy that new canoe? Come on down here and get it, and we'll have it ready for you. And I think Academy's done a very nice job of doing that.
It's Karen. Thanks for coming on. Let me just ask you a couple of questions about the stock trading. So KKR had sold 12 million shares in February and possibly more today, 9 million. We don't know yet, but that seems likely. Do you think there's a overhang on the stock? Do you know what they're planning on doing with the rest of their position? And does that matter to you?
Well, I think you sort of define the overhang. So yes, it was an IPO that happened late last year, and they've been selling that down. But I think that's sort of a normal, natural process as a company. As it gets more float, I think you could end up having more interest, and it actually will help the liquidity so that some larger funds could actually take a look at it. So I think I actually look at getting rid of the overhang is healthy. and it will allow a fuller, more market to develop for the shares. The easiest comparison, I would say, that's out there is Dick's Sporting Goods, and we like Dick's as well. It's a good company. They have even higher digital penetration, to give them some credit there. But they trade basically 3 or 4 multiple points higher than Academy. So that's why we use 11 times for Academy on our next year numbers, and Dick's is around 14.5 or 15.
Sorry,
that's a nice gap.
Sorry about that, Greg. This whole remote thing is not working out too well tonight. In terms of your bull case, $48 is your bull case. Given the high short interest in this name, given what we now know in terms of the interest on the Reddit boards, does that $48 bull case become a little bit more likely in your mind? Does the needle move toward the bull case as opposed to your base case because of that?
The bull case is a bull case, right? So it's a lot of things line up, right? So I would say that the bull case could become relevant, let's say, in the next 18 to 24 months. If they can cycle last year's comp and show that they won new customers through the downturn and continue to develop that multi-channel business, I think that's where the market will start to say, hey, this thing, Academy is worth more than 9 times earnings. It could be worth 10, 11, or 12. Maybe even 13. They also are generating a tremendous amount of cash. We think it'll be over $300 million a year of free cash flow the next couple of years, and that means that's a free cash flow north of 10%. We just don't get that for a lot of growing quality retailers.
Yeah, and the company has said that they're interested in delevering as they generate that cash. Greg, it's great to speak with you. Thanks for educating us on the stock. Greg Mellick of Evercore ISI.
Shepard Smith here. Thanks for watching CNBC on YouTube.